like going up.
Slowly see up, yep.
It's a little bit of special effect. Well, welcome everyone. Thank you for being here. Super excited to start that second session of Enterprise on Ethereum with the EEA. And today we have like 3 EEA members, actually 4, but 2 are like closely connected. So welcome to Hacken, Gateway, Edge and Node, and the Graph. I think we'll like a few today, and as I mentioned before, the idea is to really exchange some perspective on the institutional market and what you see from your different angles. I think I probably want to start with each of you. If you could give us like a quick intro of the company you work for, what you do for them, and maybe something that excites you right now. Like we'll keep it short, and then after I'll dive in some few questions, and we can start chit-chatting. Maybe I'll start with you, Mickey.
Sure, yeah. I'm super happy to be here. I'm Mickey Nagus. I'm head of enterprise sales at Edge and Node. We are the R&D lab behind the Graph protocol. I live in New Mexico, and I'm super excited to see large financial institutions that historically have moved quite slowly, suddenly coming to market really quickly with private chains, stable coins, and other digital assets.
Awesome. Andrew, you want to keep following up?
Sure, absolutely. I'm Andrew Clues. I'm the Enterprise and Governance Lead for the Graph Foundation. So I focus on enterprise relationships as well as any of the governance functions, so any of the GIPs or proposals to make enhancements to the Graph protocol.
Okay. And so you two are like related as, Edge and Node. Maybe for those who don't know, like the relationship between the Graph and Edge and Node, if you could share like a few words about this.
Sure. Yeah, I can take this, Andrew, if you'd like. So back in 2018, there was an original founding team of the Graph, and that team was called the Graph Protocol, Inc. And when we launched a token, GRT, in late 2020, early 2021, at the time, there was a lot of regulatory risk about launching a token. So we spun off the Graph Foundation as a nonprofit entity, Cayman's entity to manage the token treasury and governance, and then rebranded the Graph Protocol Inc. to Edge and Node. So we're still the founding team behind the protocol, and we have a close relationship, as Andrew mentioned, with the Graph Foundation, which still manages governance and the token treasury.
Oh, sorry, I just lost a connection.
Oh, you're back. We got you. Oh no, he's frozen.
Listen for a second. Oh, yeah, we have you.
Well, there we go. This is live for sure. Cannot make that AI doing this, This is pure human intervention. Thank you, Mickey. Well, I guess, Yev, do you want to follow up with Hacken and what you also you're focusing on?
Sure. Hi, everyone. My name is Yev. I'm a CEO and co-founder of Hacken. We're a digital asset security infrastructure provider, helping to secure everything blockchain related since 2017, since early days, and now working on the risk, compliance, and security.
Okay.
And when you ask what excites me and what Mickey is selling, I think it's very cool to see from someone who started working in crypto in 2014 to finally see the real adoption as we all dreamt about. And finally, now we are not, small sandbox with the geeks curious about cryptography and cryptocurrency. Now we call it digital assets, and talking to regulators and big enterprises and TradFi how to implement it securely in the regular infrastructure. So this is it's very cool to be in this moment after being here for so long.
Okay, thank you. Igor, if you want to drop Igor Hacken, because I think we need to find some but
So I'm Igor, Chief of Growth, and basically I do what Yev tells me. But jokes aside, it's more so about she lays out the vision and we implement. So it's maintaining a relationship with institutional and government and other entities that we work with.
Okay, well, finish with Igor M.
Yeah, thanks. I'm Igor, and I'm a co-founder and CTO of Gateway. We started in like the idea of gateway, and I started doing something about this is late 2020, and our whole idea back then was that we need blockchain infrastructure with enterprise spin, like for the companies, which was very rare back then. And since then, we evolved into the whole like platform that we are offering, starting from like spinning your stable coin through the privacy solution, through like blockchain as a service, RPCs and whatnot. But we started again from the RPCs, and I'm actually super excited right now at this moment because again we started with this vision in 2020, and finally around end of 2025, beginning of 2026, it feels that somebody really kind of understands and starts actually thinking about the same way that we do need an infrastructure that's would be enterprise grade and would be properly aligned with the institutions.
Yeah. And I remember you were like one of your co-founder was also like a co-founder of, you have some relationship with Nethermind, right? Which is one of the biggest exchanges on Ethereum.
Yeah, Pradeep is my another co-founder, and before Gateway, I was one of the founding engineers of Aragon client, and he was one of the founding investors of Nethermind. So we used to be quite a big competitors for the market share of the alternative Ethereum clients. And they won the market game, but now we're working together on bringing like blockchain adoption more towards enterprises.
Oh, Aragon, you know what? That's very fun because it turns out when I was working at ChainSafe, my previous company, we did an instrumentation of the Aragon client for the graph, and I think it was with you, Andrew, right? With you and also Agent Node, where actually the team were like building the whole data pipeline from Aragon to actually feed after that in the graph. That was a very, very interesting project.
That's a very cool coincidence. Yeah, I started in Aragon when it was still TurboGeth, if anybody remember that time. So yeah, it's kind of journey.
So we have a full RPC integration platform as with Gateway. We have like I would say data provider for on-chain data and with the graph and Agent Nodes. And we have like a cybersecurity, like a OG for everything crypto related. I think we cover like a pretty interesting landscape here in the market. So I'll start maybe with the first like general question to dive into this. I'll try to keep it also like general if there is some audiences here that are like less super crypto native. But you're exactly on different layer of the stacks. What each of your verticals, I would say, what do you see like the most interest in terms of like institutional adoption? What like those different things that you see institution interested about when they reach out to you and when you contacted them? And please feel free to jump in like the first one to answer. This is an open mic.
Sure. Maybe I'll lead off. Maybe I'll give a bit more context about the graph just a little bit before I answer. So the graph is focused primarily on indexing data, and you can think about it as reading information on a blockchain, right? So there's lots of information that's written to a blockchain at any point in time. And so if you want a subset of that information to build an app, maybe a trading algorithm or an AI agent or anything like that, you would use some of the graphs technology to help you do that. So originally we had subgraphs that was sort of industry standard as the way that you would read blockchain data. Enterprises have experimented with that technology. It's open source. It's very easy to access. And since then, the needs have definitely evolved. So in terms of going from the experimental phase towards a full-blown production environment, you need to be able to index information much faster. You need to be able to handle more transactions per second. And you also need to know that you can do it in a compliant way. So those are the key pieces that they're interested in us solving for them.
Yeah, the compliant aspect, because it's not just having everything on your Etherscan or equivalent, is be able to digest that data and consume it and deliver it for the compliance department. Is this really? Yeah, go ahead.
Oh no, you continue, and then I'll
go ahead, Igor.
Yeah. No, I just wanted to jump on like what we see, because we're standing a little bit both more high level and more low level than the graph, because at some point we're offering this ready-made solutions basically end to end for, like, let's say, in RWA. And that's one of the topics, for example, that institutions are very, again, interested in any kind of a tokenization platforms there, as well as compliant stablecoin issuance, if they are just interested in digital assets, what we see. But then, and we're probably going to talk about this a bit later, because there is a gap in how these companies understand the digital assets at all. So some of them are really, really well versed in this. So then they want some specifics, like maybe a privacy solution, maybe they require certain reporting, maybe they require like some compliance audits or something like this. Maybe they don't know anything and they just want to, I don't know, tokenize their deposit and don't get in trouble if they're a bank. Like, and that's roughly what they want, right? So yeah, there's what they're excited about, and they're also excited to try out the wild west of DeFi, but also try to still keep control over how they're doing that, and that's what usually stops them from going like directly without anything towards, let's say, Ethereum there, because yeah, they feel that they're losing control a little bit. So yeah.
From our side, usually now we see big progress, even from the last year when we were still having pilots. Now we have real deployments, like in live projects, and this is I think it's a big win for us as an industry. When we are talking to institutions, we usually talk to either GRC teams or security teams and talking about risk. What kind of new risk digital assets pose to their normal infrastructure, how they integrated it to their like governance and compliance processes, and also like how to address this new type of software and what kind of risks are there, how to monitor it properly, how to address like software issues. So this is the questions when we are usually talking to while they are building their digital assets infrastructure.
Okay.
If I can add to that, it's partially just my background was in TradFi banking. So in 2014, there, for example, Wells Fargo Bank allocated $25 million in potential losses for the year. That's what they were comfortable with. Right now, they want to get all the benefits of this whole new digital world, but yet the potential losses and unpredictability, it scares the heck out of them. So I think when we're talking to them, it's about having the added security layers, having to make sure and understand that whatever they're implementing is exactly going to deliver what they want with the risk level that they're comfortable with. And it doesn't really add up that way because they're used to a certain way. They're used to an old school way, but they have to get comfortable with it. And also, we're from DeFi and blockchain, kind of was like the transparency and like we see everything. That scares them. That scares like to
and
see
decentralization. We used to say
that.
decentralization before.
Yeah. So I mean, in this case, transparency scares them because like the moves they're making are transparent, and so they're like, well, I don't want to know. I don't want others to see like what moves I'm doing. So it's fun. It's fun to see how they're evolving.
I think just to add on, so from EduNode's perspective, we're building new software for regulated users. We've discovered similarly that what works for DeFi users likely won't work. One-to-one, you can't just copy and paste infrastructure from DeFi and expect it to meet the compliance rigor that you see within these large TradFi institutions. And in speaking with these enterprises, they often feel like, they're operating in multiple jurisdictions. They have to deal with auditors and regulators all over the world. And sometimes they feel like, shots are being fired at them from different regulatory jurisdictions. And it's really hard for them to know if they're able to be compliant cross-jurisdiction. And for us, we are building software to act as that bulletproof vest. So they don't have to worry or lose sleep at night thinking, am I able to even meet, let's say, the Genius Act requirement for one-to-one proof of reserves for stablecoins or redundancy and data ownership under DORA in the EU. They don't have to worry about those things. We're building the infrastructure with those compliance use cases already in mind.
And I'm curious, you mentioned the privacy. You mentioned also like they're pretty scared of like sometimes the transparency that comes to putting everything on chain. But I guess especially from the security perspective, and we've seen with the recent hacks, it's security can be such a broad topic. It can be like purely technical. You can have also like the way you manage your software, the manage you like a GIP, an upgrade of the graph protocol can be a security issue if you don't know how to measure those things. And so I'm wondering like where do you put the threshold in all those analysis, because you can go very deep, you can go very high, and I'm pretty sure you have like question that fires in every direction sometimes when you work with some of the clients. And I'm curious if you would like to share like how you approach that, when they come to you with like actually those fears.
I think from the graph side, I mean, as a software vendor from eea-eth's perspective, I mean, there's some common things that you have to prove and demonstrate. SOC 2, static analysis in your software releases, bug bounty program that Andrew has been very involved in at the Graph Foundation. So we have a number of kind of a suite of security protections that we've implemented. But I'm curious to hear from Hacken's side, since this is your bread and butter, to get your take from the other side of the table.
I think a smart way is to start with the risk modeling and understanding what are threats you have and how you address these threats and what are the actual probabilities of them happening. And what we see from the recent hacks, we're moving like way far from like smart contracts itself. We're moving to social engineering, we're moving to infrastructure security, and what's used to be cybersecurity in Web3 back in 2017, like having your smart contract audited, is like it's not enough anymore for a long time already. And for us, it's about the building holistic approach to security, starting with the secure software development lifecycle, then having proper internal audits, multiple external audits, having ongoing bug bounty program, having proper monitoring and incident response, and people responsible for that who knows what to do and which like order and how fast, and also having some kind of insurance in place if all of these measures are not working. So I believe we are in Web3 used to make security small, not the part of the operational process. But now with all the recent hacks, I think it's quite clear that there are so many pieces involved, starting from the human education. Probably all of you received this type of scams, like let's book a call, let's catch up, and here is the link. Oh, the Zoom is not working, please update the package. Probably like all of you for last year received this kind of messages, and so many people were hacked from our industry. It's crazy, and we're like all kind of aware of what's going on and like of this type of issues, but look at the results. And this kind of attacks are getting more and more sophisticated. I don't know how many such attempts I receive every day, like from different quality, but I think we start from this, because from this you get to your like Telegram accounts, to your Slacks, to your like infrastructure, and from that you can find a lot of issues. So answering the question, I believe security should be continuous and holistic, and that's what we should focus on.
And I wanted to add also, like I did a little research recently, just again for ourselves, and also to some extent for the sales proposition, that's about infrastructure hacks versus smart contracts hacks in the last 24 months. And I think in amount of hacks, at least with the research I got, was that they were around like, again, maybe 65% of infra versus like 35 of the smart contract. It doesn't sound that bad. But if you look money in the account, then immediately smart contract hacks are like just 12% of all money that were hacked in the last 2 years. And the rest is purely infrastructure hacks, meaning I'm including like developer tools hacked, like developer accounts hacked and stuff like this. And that's where
control issues when you're referring to this.
Yeah, basically anything that's not smart contract, but like some compromise of infrastructure, meaning again, you lost your GitHub token and some CI got compromised or anything, right? Like with Bybit, I think hack was and stuff like this. So and to the point here, we were undergoing SOC 2 and ISO compliance audit. We just got the ISO certificate, and a lot of ways there are actually about putting these controls. And kind of auditing on these controls always, like that you cannot store certain things there. You need to have procedures, and it's a lot about procedures. And I was kind of joking at some point that it looks like informational security. It's really similar to like airline pilot job, because you kind of think that it's something really cool, but then it's a checklist upon a checklist upon a checklist upon a checklist, right? And that's where, again, of course, the certification is not like something that's a panacea, right? But at least it gives some minimal assurance that some kind of things are put in place. And it's more and more and more important on who's your basically infrastructure provider, with whom you're working on the infrastructure, even more right now than just, again, as I said, smart contracts audit or something like this, because it has to be holistic.
But I'm just curious from your experience, if you're referring to certification, don't you think it's not enough what we used to have in Web 2, just like classical ISO 27001 or SOC 2, when it comes to on-chain infrastructure? Of course, we have key like some kind of confidential information management there, but everything coming to key materials and like revoking keys and stuff like this is still not enough, and it's more about information security, as you say, rather than cybersecurity. I think we're still lacking the standards which address specifically the on-chain risks in this traditional Web 2 security world. And I say that we need both, because in Web 3 we used to think only our Web 3 world and like smart contracts wherever, but in reality we need organizational controls, we need certifications, and we need all the on-chain security part.
No, of course, and that's where, again, because as soon as you go to Ethereum again, then let's say your Oracle was looking at a single RPC endpoint that got poisoned somehow, right? Then you're done at that point in time, right? And even in the more advanced attacks, like with layer 0 stuff, they can always see, and you even see that, okay, this maybe RPC endpoint is harder to poison, so we just try to DDoS it. So it's like it falls back to old, so it comes to the weakest link. And that's where, again, some things like, again, layers 2 might be useful, because in there, unless your money is leaving towards the ecosystem, it still can get some security, like through ZK or something from Ethereum. But then you have your own piece of block space. Then you can do the same stuff when you did like in fintech and Web 2. If you get hacked like this, you just, okay, I'll roll back this stuff and we just rotate all keys and all will be fine again. Because some of these controls is still needed if we want real like world adoption, because you cannot have any certification to be perfect. So you definitely need to have like this plan B, what to do as soon as things really break. And yeah, there's where again, something like an L2 on Ethereum or something like this might actually help institutions.
But you have what you say, if those like SOC 2 and ISO 27001 are sufficient, I think it's the right question to see, like, we need to make also like those framework evolve to integrate like what Web3. But I think that's also like the same, Web3 has been so focused that they forget even some basic things. And if you look at I think it was the Drift hack, part of the postmortem that they put online is that the developers of the protocol were using the same computer to also sign transactions for the protocol, which this would have fly like 101 of any of those certification, like the segregation of like physical device, the fact like they isolated in different environments. And these are very, very boring companies. Those are things that they look at it like, okay, kids, we'll talk again when you're like a rich adult time, because that's really like something that is pretty basic. Early in my career, I worked in an aerospace and defense company. Those were really like some standard things, like in addition to a crazy amount of like safety issues. So I think we need to also graduate as an industry from like those pretty basic things, and then also integrate and probably also like some work that we need to do together as an ecosystem to structure, what security also going to mean for integrating like the new specificities of like Web3, I would say.
As we grow, as we mature, as all these checklists get completed, and everything you guys just kept on going and mentioning, it all ends up being when your HR department downloads a resume with a Trojan horse, and it all goes down the drain. So I mean, honestly, we have to do the bare minimum, but the weakest link still ends up being our team. So that's something that nobody has mentioned, that the training of our teams and our employees being our weakest link is so important and so underestimated. So I think that's something that is a high point and should be highly not disregarded.
And I forgot to mention, but at least when we worked with auditor for ISO and SOC, the training was required like twice a month, and plus some scam kind of emails sent to every employee was kind of required a certain amount of this. So this covers a little bit with the certification as far as I'm concerned here.
I personally, I spent 10 years working for the US government doing counterterrorism and classified operations. So I'm used to working in a really high security environment. And even there, yes, of course, they took protections against brute force hacks from North Korea or whatever, but the number one biggest risk was for sure social engineering. And I think that's true in our industry as well. And typically, you know, when we've grown up in DeFi, we have very high attack surface areas that are public. Like here we are on a public call. We live our lives very publicly. How many Telegram chats are you guys all in? Hundreds, right? If not thousands. And I think that is our number one biggest risk area and the lowest hanging fruit, quite frankly. To someone's comment in the chat, there's very little difference between my sales team's outreach message with their Calendly link and a hacker. So it's really important to be on guard. And it's kind of like guilty until proven innocent, in my opinion, because the rate of attacks is always increasing and social engineering is getting more and more sophisticated every day.
Yeah, and in fairness to the financial institutions, there are natively learning management systems and things like that to educate the workforce, but now we just have to modernize them with these new threat vectors, right?
So. I mean, Andrew, that actually make me think, you know, you got like a partnership with DTCC like a couple of months ago. And so this is one of the probably like the most important financial market infrastructure company. I mean, it's a kind of co-op, but and they for those who don't know, like they handle every securities in the US. So like I think it's $4 quadrillion in value per year. I mean, it's really any stocks equity that moves in the US goes through them. And so I'm curious, you know, when you start working with a company like that, what was the process and what were the things that you actually had to also like comply and with?
So in fairness, I think you're referring to our announcement at SmartCon. Shout out to the Chainlink team for that great event. So we were on stage with DTCC talking about how they were leveraging graph technology. And so Derek Meyer, who's the CEO at Data Nexus, he's responsible for working with DTCC and implementing the graphs technology for some of the solutions they had. Now, some of the stuff we talked about in that was just how they were able to leverage subgraphs to be able to iterate through the proof of concepts quickly. It reduced the amount of time they had to spend in just to be able to read blockchain data. The fact that, again, that's open source technology, it's easy enough to deploy on-prem. But that sort of experience in working with an institution like that helped us, rapidly understand some of the requirements and concerns that other financial institutions like that have. On-prem deployment being one of those things. And maybe, Mickey, this might be a good spot for you to step in and talk a little bit about how our learning has evolved since that work.
Yeah, totally. I think, look, the DTCC is huge, right? They're enormous. It was a really great way for us to battle test our software and our processes in supporting a regulated institution. And I feel like it made us really prepared to work with other heavily regulated institutions in the US and abroad as well. Oftentimes these enterprises have commercial and analytical teams that can't even be CC'd on the same email. They have an enormously high compliance bar. And yeah, I feel like the DTCC experience was really a foundational experience for us in learning how to serve these needs, which is the needs are so different, right, from our historical Web3 consumers. And yeah, it was a really amazing opportunity to work with Dan Doney, the CTO at DTCC, and Derek has been phenomenal in serving that account, making headway there. And yeah, it's really been a phenomenal experience and prepared us to work with other regulated customers.
Super exciting. I guess Igor from Gateway, like since you provide like complete like whole infrastructure, and they mentioned like on-prem, and I remember like talking also with Rodrigo, like I think the CEO of EdgeNode, and he was saying like the big arguments, like the fact like you can deploy, not everyone wants something completely decentralized, and that you don't have any control, but like, do you see also, I think you have like a CDK, like a chain development kit, you have like a tool also that allows like people to migrate from any L1 to actually an L2. I remember like seeing that a couple of months ago. It's something I advertise when I want people to come into Ethereum. I'm curious, what you see, like with what Andrew and Mickey like just mentioned, when you talk with some of your institutional clients in terms of like deployment and constraints. What can you tell us about this?
I actually want to start in a different place. I want to start with, again, the layer 0 hacks and this part and decentralization in there. And what it showed to us, and from all the things, it was that decentralization is very expensive. And if you're trying to do decentralization for theater purposes, it gets hacked very easily. And those who don't have enough resources, and only few chains really can have enough resources to be properly decentralized in a secure way, like, for example, Ethereum, right? That's where, again, and in a lot of the solutions, maybe a good, protected, centralized solution would have been much better, that is honestly centralized and not trying to pretend to be a decentralized solution in some way, shape, or form. And that's where, again, the on-prem argument comes in. So if we offering to migrate this pseudo decentralized L1 that has really 4 validators, because that's the minimum that consensus can handle, and nobody else wants to run more because money, right? Then into like an L2 that's anchors on Ethereum, that publishes the proofs, that's basically, and doesn't leak privacy, but then you can keep it within the organization boundaries, meaning, again, the data residency question, that's okay, this institution here wants to be really sure that the data they're using, it's in specific geographic location, ideally in their own data center, or in their own, at least, whatever, Azure or GCP or AWS account or something like this. So that's where, again, we definitely see the demand. And I would say that for bigger, like DTCC, for example, is a very big institution. There are other similar institutions as well. They all want in the end to have things in their environments and have all the control over them. But they're happy, let's say, and in this case, our goal traditionally as a SaaS player and provision like managed services more becomes like we help them to run it with the access we can have. And then, but it still goes into their like data centers and all their premises, which kind of satisfies them quite a bit. We had to, like, literally, I think end of last year, beginning of this year, invent how we can work that way. Because again, if traditionally work with much more either fintechs or just like native, like, I don't know, blockchain native projects, which is totally different game. They're happy just to, you give a link to us, it's good enough. Like, we can sign in here with Google, amazing. Like that's all we want, right? But all these big institutions, they of course come with their own set of requirements, and that's where we're, again, working towards this.
Yeah, we see that same trend too. We've been joking lately that on-prem is the new cloud, because it really feels that way. And I mentioned DORA earlier. For people who aren't familiar, it's the Digital Operational Resilience Act. It's an EU regulation. I think it was passed in maybe January timeframe of last year. Banks, insurers, investment firms, a bunch of folks are regulated under that act. And one thing it states is you can't have vendor concentration risk. And you also have to own your data. So you either have to have multiple redundant data providers or own your own pipeline. And so similar to you, we've been building software that can be deployed on premise or inside the customer environment for them to operate. So they don't have to worry about if a vendor goes down, gets acquired, their prices change, they're sanctioned. The customer is not exposed to those risks. And they also can meet their upper regulatory requirements without having to purchase an entirely second redundant service just to meet that requirement. And then also, improving that their data is correct. That's also becoming, I think, a big topic of discussion this year. If you query a third party service, how can you prove to regulators that the data is accurate? You have no visibility into that black box. And for most regulators, you can't just say, my third party vendor said it was accurate, so it's accurate. That doesn't meet the burden of proof for showing that your data is correct. And we're starting to see this pattern. You really have to operate your own infrastructure in order to meet regulations and guard against these risks.
Oh, yeah, I want to add about this because we ourselves are also an audited company by PwC. And again, we went through this pain, and we've been audited since 2021, the financial year. So we have to educate PwC on how do you have to book like staking and stuff like this. But now I also see that they're very meticulous about what is where, who has access to what right now, which regulations apply to where. And that's where, again, we're using our experience and our, to some extent, pain there to make sure that if we work with an institution, they don't end up with like, and I've seen, I don't know, like $250,000 and $500,000 quotes for audits when nobody knows who the keys are, or nobody can prove who the owners of the keys for some kind of a on-chain treasury. And so we try to make sure that when we build the whole solution for those who, again, wants to have the whole solution, that we can actually advise them onto how to use and how to set up their like custody chains and whatnot to make sure that they don't end up in these problems then that's nobody from Big Four wants to audit them or wants to audit them like for very big amounts of money.
Yeah, Vigor, since we're talking about audits and like those maybe are a little bit more not security per se, but I'm pretty sure you probably have dabbled into those also. What do you see from your side of the market? When you work with institution, like in how they approach, either like like the data residency, like is this on-prem, off-prem, like the vendor risk? How do you approach this within the Web3 ecosystem when those questions arise?
Yeah, definitely. I think first, audit for us and audit for institutions means totally different things. We used to call audit like code review in a nutshell. And audit is the word that's used by Big Four for like financial audits and different type of pre-certification audits. I think this is the big difference. And when we talk about audits, we need to understand what we're referring to. But when it comes to certifications, especially those which institution understand, because probably like each due diligence form will include questions about ISO and SOC. This is like for sure something standard that like every vendor should provide like before even starting to working with them. But also I agree with Igor when it comes to key management, they don't require that, but still it's something that should be properly set up and managed. And for us, we expanded like way beyond the smart contract audits. We do different kind of compliance audits in preparation for ISO for like blockchain native companies. And we advise them not only on the controls there, but everything that should be addressed on chain, all the risks that not required there, but they should be considered. And I believe we are still lacking the standards that are accepted and understood by institutions when it comes to on-chain part. And this is a bit of like a trouble because the risks are there, but we are not properly addressing them while integrating digital asset infrastructure to institutions. There are definitely some initiatives and like good examples like CCSS, but it's still not that widely accepted in the market. There are quite a few certified entities already, but we need way more than that. And this is the issue when it comes to certifications and audits, not just the paper-wise, but the real security-wise.
Okay. I'd add to that the standardization of this cybersecurity process is much needed, because at this point, for regulation and for compliance, we're seeing that a lot of the companies are doing that checkbox list, not really putting any thought into it, not putting any meticulous preparation, regulator or compliance department said this, and they're just checking boxes. That's it. And they're just like, we need a CISO. A CISO needs to be, and it's for most part, it virtual CISO suffice, but that really means nothing. That's no implementation. That's nothing that's actually being conducted on a regular basis. And so to me right now, and I'm sure for most, that's looking like checking boxes and not actually taking security serious. I think it's going to take a real big event where regulators and compliance will have to relook, or maybe we should be the one leading the way and standardizing the this whole process and making this like one big thing. What do you think, Red One?
Yeah, I mean, I'm checking the CCSS. I know like the cryptocurrency certification consortium. We've done some work in the past, with East Trust, which was more, really specific to smart contract. There was like the drama also with the EA that people can check. I was recently on a roundtable also with the Global Business Blockchain Council, and they're releasing like the risk mitigation framework, which is a very like extensive, like I would say like really like big risk framework for evaluating L2 and L1. It's like 90 pages. I haven't like still had time, but all the regulators.
You mean GBBC one, right?
Yeah, the GBBC one.
Yeah, it's a good one. I
think this is some super interesting initiative, and I'm really trying my best to support also like those like I would say sister and friend organization in that mission, because I think especially like they have like a wider, like not just Ethereum, like also like some other L1, and I think what I see is that there's sometimes like some very understanding of how actually like the L2 L1 operates, what are like the actual risk, how you can mitigate like the settlement between the two, what are like those kind of different controls. And there was question actually from some regulators that actually seems like do not like really understand and make sense, because it takes a while to study and to see, okay, you have like it's almost like computer science level, like you need to understand the state of one system, how it transitions to the other one. You have some fault proof, and everything is cryptographically like sealed. So like if something is happening on the L2, it's also like replicating on the L1, and those like actually are very elegant design, I think, but I think again like the education, helping people understanding like how this works and how they can be confident. It's something that's still like I think still is pretty much lacking in the ecosystem.
Yeah, I agree with you. But also I think there is quite a few examples on the regulatory level. For example, we've been working with ADGM in Abu Dhabi. They have quite extensive, I would say, cybersecurity requirements when it comes to licensing, and they are quite innovative when it comes to monitoring all these licenses and their procedures, their governance, tokenomics. And also another example is the Bermuda Monetary Authority, BMA, and their pilots that they do when it comes to like cybersecurity requirements and in general like monitoring of the compliance and risks of different digital asset companies. So I think cybersecurity is something that you do whether someone pushes you or you are hacked. And who pushes like regulators, like when you are going through some due diligence, like either for institutions or VCs or whatever, or you are hacked, and you need to do it, right? So in this case, I see regulators, and especially like Miki, what you mentioned, the DORA, they do require quite a few good stuff when it comes to on-chain cybersecurity, and it's a good sign. It's not properly working yet, but it's a good framework to rely on while going through licensing in European Union.
I totally agree. I think a lot of the regulations, even the early ones, they're good starts, but I think it's our collective job to educate regulators. I'm sure you guys are doing the same. Andrew's team and my team are meeting with regulators to educate them. To Redwan's point about this, like some deep cryptographic, proof level information that they might not have ever heard of before. Data consistency, of course, is super important to us, and there are huge risks in incumbent indexing solutions on the market around, losing data, missing transactions, and it's a whole other can of worms we could open. And so there are risks to regulated institutions for using some of these incumbent solutions. And so it's our job to educate regulators and make sure that they understand the lay of the land, completely independent from our sales cycle, just fundamental technology level education. So then they can make decisions on the rules that they need to bake into their regulations to protect institutions and in turn protect consumers. At the end of the day, this is all about consumer protection. A customer shouldn't have to ask in exchange to ensure that the data that they're providing to the customer is correct or making decisions on is correct. It should inherently be correct. And so to your point, though, yeah, institutions are only going to do what's required of them. And so I think this is a regulatory play, an educational play, to really ensure that regulators have the full picture in new technologies they've never heard of before, but suddenly have to regulate, and ensure that they have that full picture before they establish, hard set rules in stone.
What is, and I ask to all of you, we're all like technologists in innovation. And so what is the approach that you've seen like being very efficient to actually explain some of the concept when you talk to people that are not like living in breathing like cryptographic innovation and Web3? Have you developed like some specific strategy or some analogy that you use to explain some certain concept? I'm curious to hear from your perspective.
I think there is some level of education, at least with nuances and challenges with blockchain data, like the concept of reorgs. I think that's not something that's tons of awareness around, and also complexity around synchronizing blockchain data from, as you described, L1s and L2s and what that relationship looks like, or even EVM and non-EVM data, and having to synchronize that information into a single view so that you can get a picture of what's actually going on with whatever product or app it is you're talking about. So it's a roundabout way of saying there's a number of pieces we have to educate on just to bring them up to speed in terms of the risks that are out there and the challenges that exist.
So reorg L2 and L1 for you, Andrew.
Yeah, L2, L1, EVM, non-EVM chains that can be built using different programming languages, and trying to make that all come together into a single picture, so that you have a fulsome view of where RWAs reside, and what your actual positions look like. Like, these are all different challenges that we have to educate on.
Yeah, that's where again, when we design some solutions, like for example, this open privacy suite that we did with role-based access control, we kind of also heavily were inspired by traditional role-based access control systems, like from cloud or something like this, to make sure that even though it's applied to something different, but at least the interface elements, the places how things are called and whatnot, they're very similar. So it basically makes like a metaphor one out of another. So if you understand your role-based access control in AWS, for example, and you can set it up in a way that's one through UI or another through infrastructure as code, we can do very similar thing on the basically privacy suite, but you can also do it through the UI and the infrastructure as code to make sure that, and the same stuff on the smart contract level. So all these things, we try to basically do them as closely as the systems at least their technical people are used to working with, because otherwise it's very challenging to kind of explain it from, at least for me as a technical person, from the scratch. But at least I can do an analogy. Okay, your database right now has this users, this user can do this and that, and in this case, okay, the blockchain that you run is much more, it's more advanced than the database you run, but it's also can do this and that, and that's how the rules are. And that's what people can see and whatnot. So there is kind of analogies, finding analogies in basically traditional infrastructure world as much as possible.
But also probably we shouldn't in the ideal world, it should be working without the overcomplication and understanding there is a blockchain in the backend. So in the ideal world, it should be as easy as, going to your banking and using the stuff that you used to use, with the proper interfaces, with a clear stuff, not just saving your keys somewhere, then like this password, that recovery phrase. If you want that huge adoption, because the whole concept is your keys, your crypto is quite hard to understand, because you need somehow to manage these keys, right? And change the paradigm from the passwords to keys. So that's been hard. But I don't have a good analogy to say, but I remember my favorite question that I was ever asked, like, where is the Bitcoin office?
Yeah.
I
wish I knew.
Yeah. I mean, one more point that I could also maybe, again, say here, that like our industry, especially in the earliest kind of days, and it still is so enamored with overcomplicating so many things. And that makes our life much more complicated than it should be, even with explaining this, because there are so many things that are heavily over-engineered for no particular reason, or for some reasons that turns out not to be relevant. So it's it makes life a little bit more difficult explaining these things historically.
Have any of you had the privilege of explaining to your parents what a credit card is? I don't think anybody is that old. I think this is exactly the next generational kind of situation where we're trying to explain these complicated and these structural like things. There's some digital money floating around, and I just remember back, not dating myself, but back in the 90s, having to explain the concept to my grandma. To be honest, like now you have this card that will replace your funds. I think we're doing the same thing to them, and the key is to simplify it. Like these are super smart guys on how to make money, how to stake it. They're understanding that. But if you ask them how blockchain works, not a single one of them can explain it. So to regard to Yev's question, where's the Bitcoin office? My dad asked me last year, can you show me the Bitcoin? And when I showed him, like I tried to open my wallet, on my phone, my dad's like, no, that coin that I see in the newspapers, show me that one. So like we are right now overly complicating things, and that we totally understand. The 6 people on the screen right now get it, and they understand what needs to be implemented. But the guys actually using it have no freaking idea.
Yeah, I describe. I'm from the 80s, so I remember when the very first public computer was installed in my local library, and you had to go like sign a register and get your turn on the computer. And that was revolutionary. There was Encyclopedia Britannica on the computer. But if you guys ever used actual physical encyclopedias, a blockchain is like ripping every page out of encyclopedia, jumbling it up and throwing it in a pile. And then someone has to go find a single sheet of paper that contains the information they need in this insane pile. And what we do is not just organize that and put it back in the encyclopedia. We're like Google. You just write a SQL query and get the information you need. You don't even need to look at the pile anymore. And so I think there are a number of ways you can frame analogies based on kind of who you're speaking to. But that would be an analogy I would use with, let's say, my family or someone who's not familiar with blockchains at all.
I love that. Indeed, explaining your grandma how a credit card works, that's definitely something, because actually credit card, it's pretty complex behind the scene what's happening, like how the money flows. And even myself, I discovered that a little bit more in detail about like a year ago when I was at the payment conference, and I was with a friend like Daniel, that is a former like Swift innovation and expert, and he laid out everything. I said, okay, that's a pretty complex dance that's happening behind the scene. But as you said, I think it's exactly for us, like abstracting the complexity and focusing on what you want to do.
There are certain use cases, though, when, again, we see that blockchain is dramatically simpler than anything. Again, I got another example. Like when I worked at Opera, we worked a lot in the developing markets. And when you deal with a cross-border payment from, well, let's say Nigeria to South Africa, where there's a chain of banks, each one needs to hold each other funds and they should exchange, and it goes through like the whole chain. That's where, again, the blockchain sounds like cheating, because it's like, okay, you just send money here and there immediately there. It's like they can off-ramp them or something like this. And it's actually, there are cases when, but it's more for the bank people, right? Well, fintech people who understand. For the end users, it's still kind of, a little bit difficult.
But that still doesn't answer, like, where is the Bitcoin offices, guys? I want to. I was in Salvador, like, I think 2 years ago, and they have like I think it's a beach called El Sonte, and they have like what they call Bitcoin Beach, when they have a little Bitcoin office, and they have people, and they do weekly education on the for the locals on how to get a wallet, on board on crypto, use this. And I guess this is something I really appreciate from when I met with some of the Bitcoin community, especially in El Salvador, is that they hyper focus on use and like people using crypto. And that was something extremely refreshing, because as you said, like, we over engineer a lot of things that I don't know, like, from my perspective, because but I do think sometimes, like, it's very complex, and we're like so into engineering that we forget a little bit about people. And that's why I wanted to be over there, and I think what I see and what I hear from you is, like, really we are getting more into, like, hey, abstraction of the complexity, how we serve people. And I think it's also like the essence of why something like Ethereum exists. It's really like to allow access to people. Usually when I depending on who I talk to, when I present my work, I said like, financial inclusion in general, because at the end that's making, financial services more accessible. And I think it's really refreshing to see, especially, like actors like you, extremely involved into the institutional adoption, to be so much focused on say, hey, how do we actually serve people, that we serve client or institution, and less on the pure tech side of things. I think it's extremely positive for the market.
Actually, I know. I've been to Bitcoin embassy in Honduras. So this is probably the one physical stuff about Bitcoin that I've seen.
I see a question about like the biggest barrier enterprises facing when adopting Ethereum, especially around scalability, cost, regulatory compliance. This is a question that we have here. I mean, I think that's maybe a good way to recap a little bit like what we've been talking about. I feel from what I hear from you is like there is like some question about like how they can still have the sovereignty of the system that they implement, and having things like on-prem in your data center, in your ecosystem, be able to also like control the data, where the data is stored, and what's the life cycle of this. And I think the compliance, surprisingly, I don't hear a lot. There is some privacy, questions, but I think those can be addressed when you have like a specific L2 or a specific like closed environment. But otherwise, like the cost, the performance. I don't know if this is a topic that comes on your table again, but I'm curious also to hear from your perspective, like what are like those blocks that you can see in your conversation.
Yeah, I can take a stab at this. I'm curious, what everyone else is hearing too. I would say for scalability, I mean, there are a lot of L2s, so I think there's like a decision. Sometimes there's decision kind of paralysis among enterprises. They have to do a ton of POCs across different chains, even within, EVM chains, but also non-EVM chains. So you see institutions playing around with Canton, Solana, and maybe a handful of EVM chains to try to wrap their arms around how they can best leverage blockchains. So for scalability, I think they've got to choose an L1 or an L2, but they also need SLAs. So as they scale into production, I think this is a big barrier that we run into. In America, we call it the throat to choke, right? The SLA is the throat to choke. When you're a customer and you need support, responsiveness, you have downtime. I think that's a concern they have. Obviously, we don't have a ton of downtime or hardly any at all on most chains, which is awesome. But in terms of getting support from an ecosystem, I think that's a big scalability question for institutions. For cost, maybe there are probably cost concerns around gas fees being unpredictable. There might be misconceptions around L2s being whether they're fixed cost or not. But I think the total cost of ownership is still kind of a gray space. And for an engineering organization, they're going to ask hard questions around TCO. And then I think for regulatory compliance, in many jurisdictions, there's still no clear guidance on how on-chain activity maps to existing reporting obligations. So still, we mentioned the Genius Act and DORA, but in a lot of jurisdictions, regulations either don't exist or are still very bare bones.
Yeah, so from our perspective, scalability-wise, we spoke, but it's like there are a few organizations that have like crazy scalability requirements, but the majority are kind of fine, especially if we're talking about like a dedicated L2 or something like this, especially when they don't, like basically they will not be a victim of success of somebody else at the same time, like let's say, or somebody's like, again, there are certain times, let's say in the market, like if the many institutions comes on chain and they live on the same chain, like say the Black Friday or pre-Christmas shopping, imagine payments on chain, they will choke the chain and then the rest of the time the chain will be just like pretty much empty, right? So these things, but they're kind of solved by that. But I agree here that with the compliance, it's could be unclear, and then they very much require explaining the risks to them, what the risks are, and then how do we protect from the certain risks and in the certain jurisdictions. And it's kind of, for us as a bit a global player, it also means that we need to be aware of everything everywhere, and they're similar in some cases, not that similar in other cases. And yeah, so one interesting thing there is that the question that we've seen is also a little bit on the interop side. If there are lots of L2s or something, and maybe how do we interop and how do they even know where, like if this, let's say, like an NFT that's an RWA or whatever, T-Rex that is an RWA, that is actual representation of what's like, okay, if it was breached, for example, to their chain, if it's connected somehow through Ethereum, but being on Ethereum doesn't guarantee that it's actually backed by this. So how do we even not only make sure that within the organization they understand what's happening inside, but how do they can use safely some others issue tokens, and then also the other way around, somebody else can issue their token, use their token in a more safe way. So that's what I also heard.
And from our side, as we operate in the cybersecurity mostly, they first start from the risks. That's a new area of risk that's coming, trying to understand them, how to measure them properly, and how to monitor, and then build the specific guardrails. And I think like while we're in like DeFi world used to be more reactive, they cannot allow themselves to be reactive. They need to be proactive. That's why it takes so long. They built every possible control to every possible action. That's why it takes so long. And all these pilots are slowly but steadily coming to production at some level of acceptable risk. So I would say still the understanding and addressing properly the infrastructure layer, this new risks coming, this is the bigger challenge that they are working. And even though we're talking about standards, there is still not much standard work that they can all actively adopt and use. And because everyone is just building digital asset teams and trying to figure out things, right? While it would be helpful to have frameworks that they can easily use when it comes to risks of digital assets and security, how to do it properly.
Yeah, on this idea of interop, I think a lot of the issues have been solved around, how to create an RWA and get it on chain. But you could have, potentially two different issuers that are talking about the same product, like 1 ounce of gold. If they're not using the same terminology, like purity versus fineness, that creates a reconciliation nightmare, right? We're talking about the same physical product, but now it's creating different metadata that we have to track. And to reconcile that, it's going to be a major issue. So we need to come up with these universal standards to get to true interop.
And so what you're saying actually very interesting, Andrew, is like, because there is already like some technical standards of like how you tokenize things, but we need to go a step deeper. Is like agreeing on the actually the metadata structure and of what are those different like the different fields that we're gonna have inside those tokenized assets.
Yeah, otherwise you're gonna have a major reconciliation nightmare. Those ops teams are gonna have a fun time figuring out, when they come up with their risk policies and determining what's fungible, they're looking at the same product, but now they have a data nightmare to make that reconcile.
I think also I've been kind of really diving into like the KYC credential standard issue. How, if you have two assets, like let's say like a credit, a private credit that is tokenized, and how, if already like how you can represent on chain the KYC proof, like the data that you need to have, like the minimum canonical data, to allow A and B, they know and they do business together. But then, if you need to trade with B, you don't have to redo like every time like the compliance. You can inherit from like saying, hey, I trust this operator. There is the information and I need for my reporting. This is on chain. I can use it, and then you can already like kind of break a little bit the silo. This is also like a work. I think it's probably pretty important for the ecosystem. I see you also like Igor, like Gateway. Igor, you probably have seen that all like since like you do like the whole integration stack. Please feel free to jump in if you had anything.
Yeah, I think like one, like identity is a nightmare in general. Like there's plenty of identity providers, standards, and all of them are a little bit different. There is a little work that makes it better with the specifically like decentralized identity, and luckily, like things like Azure ID, luckily to us, they picked to use the ID standards for their identity, for example. Which is again not true for Google, for example, or some others. But still, it's a big enough player to jump into the standards, and then you can basically, there's plenty of ways of how you can represent the identity, like on chain. Like let's say the T-Rex protocol 3643 is one of them. That's exactly what we've been involved with a little bit. But then also and then we're trying to tie everything to the same identity. And of course, if you have permission chain, like for example with our again open privacy suite, you can just put KYC or you can connect your KYC provider towards this chain and reuse some KYC data as is possible. But what's interesting to us is that a lot of financial institutions actually, each of them has their own set of data for the customers, and they're not that keen of using like a third-party provider. They really want to use their own data, which makes it, again, probably to Andrew's point, very hard to reconcile these things if they come into the common ground. Let's say if you have one institution using one set of KYC checks and whatever, bridging these things or issuing something on Ethereum, then another using totally different set of KYC standards and whatnot, issuing this again into Ethereum. Even understanding the ownership here becomes like a very, very challenging thing, especially mapping to the identities. So I think I don't see it. There are standards like, again, let's say Privado ID or basically, I think DID, IDN3 or some other standards that try to standardize it, but we still don't have any really big player moving into that because basically to adopt, you need the first mover who has enough weight for others to follow. And I don't think there's right now anybody. Like Google played a little bit with ZK identity at some point, but it's also something their own that is very different from the others. So it's still kind of, to some extent, inside your organization, it's relatively fine. But then as soon as it comes to inter organization things, it becomes very, very challenging. As well as, like, again, one option is that when there is a big entity, it's like it comes from supply chain, right? If you have a big buyer of some hardware, you as a buyer can force every supplier to sign in with your identity there because they want to sell to you. So in this case, it's also kind of working well. In financial, when there's a lot of independent players who are just tangentially related to each other, it becomes much more difficult.
This is a perfect example of overly complicating things, right? So we're all streaming towards mass adoption, and yet we're doing everything to keep them away. I mean, if they centralize attestation of your identity and made it as a designed to be on chain, but then how do we bring it from chain to chain to chain? And Cantons is actually a good example of keeping it closed between communication and discovery towards one another with their privacy protection algorithm, but at the same time, they would be a perfect way to make this seamless way to kind of like attestate the identity on chain and through Node or whatever, or making it a wallet. At least we're not making every person download a new wallet for a new product or for a new service that they're using. We're beyond that, so that's already a blessing.
Yes, definitely. There is some benefits of being a little bit more centralized sometimes, as you mentioned before, because like as you said, like the L2 fatigue or the whole choice that you need to where you need to position can create like a little bit of friction. I do think like for the identity specifically, like there is a lot of solution. I shared a link with you, and I cannot do in the global chat, but there is a lot of solutions. I think we don't have like kind of the UN of identity for on-chain, which is something you probably would need, because that's so critical and at many layers. I don't know if you're familiar, but every banks, you can still not open any Google Doc or have access to Google Form or Google Drive. They always it's always blocked by the security. And I did some research last year because I was like, damn, like this, why? And it's because if you adopt some of the Google product, you have to actually delegate your identity management to Google. Where actually, I think Microsoft and some like those providers, you can still have like your internal, like in-house, like identity management system, so you control that. And this is a very critical part of your infrastructure. And it make me think, also like for us, if we look forward, we're gonna need at a certain point like something on chain that's gonna be like multi-chain and supra, like organization to manage that. Not that we decide who is authorized or not, but at least to have like a place where we can agree as a collective of what is the representation of identity on chain. And this doesn't exist yet. Maybe like an interesting.
To be frank, like and not like putting too much on the devil's advocate side, but Web2 didn't solve it either, right? So me as a person who like moved a few countries recently, like in Sweden, you can have your bank ID. As soon as you have bank ID, you basically can sign in anywhere, which is a really decent identity stuff. So you can even open another bank's account in another bank's ID. So it's all interop. Like let's say here in Switzerland, there is some national ID, but no banks use it. Like basically every bank that you try to open an account with gives you exactly a separate identity application through separate KYC process. And as soon as if you move to Norway, they also have some sort of identity, but one of them is only for governmental services, another is more for banks. I'm pretty sure in other countries is like it, and they definitely don't work cross countries, even though there's an app called the Bank ID in Norway and an app that's called the Bank ID in Sweden. They're completely independent and you cannot use it like at all. So it's and they are like both Nordic countries, like very nearby. So I don't think it's solved even like in real life, except maybe for again web services where you can sign in with Google or sign in with like whatever GitHub or something like this. But for financials, I don't see it there.
Well, I guess that brings us almost like out of time, and I think we're almost done. Maybe before we wrap up, I want to give you like an opportunity maybe to share something that if like we have institution watching us right now, or like they see the replay, something that you would like them to know about you, and if they want to reach out to you, what they should who they should contact, and what you would like to offer. A little bit of your chilling time, hair time. Miki, you want to start?
Sure. To any institutions watching, Eea-eth builds enterprise-grade blockchain data infrastructure for regulated institutions. We have an enterprise product called AMP. You can almost think of it like Bloomberg terminal data for on-chain information, but you own it. It's deployed in your environment, be it a private cloud or data center. And it has a unique suite of offerings. So you can have cryptographically provable, SQL queryable data. We can offer you 4 million events per second for backfilling chain data and sub-second data freshness. The on-prem piece is super important for you, and the cryptographic verifiability is also very important for you, and we're super interested in partnering. So feel free to reach out to me on any platform. You can find me, Mickey Negus, on LinkedIn. That's a really easy way, or just mickey@edgenode.com. And yeah, come find me. I'll be in Miami next week, and yeah, look forward to connecting.
Yeah. Who wants to go next?
I'll go. Yeah, it's anytime to chill. I'm there. So I welcome anybody to reach out to us for an assessment to get an understanding of what gaps they might have in security. Everybody's certain that they're doing their part, but based on this conversation, they're not doing nearly enough. And if they think they are, they're not. We're willing to help them out, guide them, and kind of do a review, make sure that they have an understanding. And of course, any institutional that are adding digital assets into their portfolio, they shouldn't worry about it, but they should implement necessary risk resilience on real-time monitoring that can definitely help them a lot. We do have available tools for that, and we can help them out implement and make sure that they can mitigate risk and not worry about it. So feel free with this complicated and very convoluted digital world where Hacken will be there to hold their hand.
I would continue just to keep security going. I would be happy to help end-to-end everything related to digital asset security infrastructure, starting from different source code reviews to on-chain security monitoring and risk monitoring solutions that we build specifically for regulators and institutions and digital asset managers. And I'll be also in Miami. I would be happy to meet in person. Otherwise, LinkedIn is great.
Yeah, and to whoever listens, we are Gateway. Again, our domain is literally in the company name, so it's very convenient. You can just go there. So we offer a set of infrastructure pieces to build your end-to-end solution that you want to do with it, or with the digital assets. Could it be like RWS or stable coins or cross-border payments or something like this? What's really cool, it also comes pre-assembled. If you don't want to deal with assembly this, and we can help this to you. Otherwise, if you know what you're doing, you can also get component by component the ones that you want. Like we've been as Gateway doing the infrastructure for over 5 years right now in this space, and a lot of members of our core team for way more than that. So it takes on average what I've seen to actually put something in production, even if you're really fast and know what you're doing, about like half a year-ish in this space. So we can help you use all our experience to really do it much faster. So yeah, again, gateway.fm. Thank you.
I would just say to any enterprise considering doing indexing work in-house, I would just say that it does sometimes get harder than it looks like on the surface. So definitely want to reach out to some of the folks that have been doing this since the very beginning. We set the standard. And if you were interested in asking questions about data services that we have, or if you're interested in setting up a new data service, definitely reach out to us.
Awesome. Well, and also thank you for the four of you for being member of the EA. That's without your support, we won't be able to do this. We're gonna have more events coming up in New York. I will be in Miami also next week, and I'll keep posted. You can follow us on different social media on Luma to see the next event that we're gonna do. But again, thank you all of you for your support and for being here today. It was super nice to chat with you. And I think now I guess we just to quit, right? It's probably just
absolutely.
Right?
Absolutely.
Awesome. Well, maybe I'm gonna take a screenshot before, and we can do we can use this as a reference. So I will do in 1, 2, 3. There you go. Is this yes?
Anyone watching, please.
There you go.
Okay.